An insider is going to tell you the truth about those people selling trading course online. Watch to the end for the biggest review ever. So. You have seen quite a number of people selling trading course online. They promise to teach you how to trade, but most of the times they show you more of their fancy cars, big houses, and best of all. Looking at charts seriously, like their stairs can change the directions. But here's the thing, some of them could be fake gurus. Before anything, here's something that you might want to know. I know I look like a stupid cat with a big belly and take bus 197 to my office and eat chai every day for lunch. But surprisingly, I do a bit of a trading work, or more specifically, swing trading, which is to hold a position for days or weeks. My profits are low and I don't want to disclose them, but here's the thing, I won't teach you what to do. In fact, I hope that you lose money. Watch on and you'll know why. Of course, this begs the question, am I telling the truth? You can comment and let's see how many people believe I'm a part-time trader who's going to lose all my life savings soon. Now, here's why these courses might not be so useful after all. I'm going to simplify everything, so if any professional trader see this, just know that I'm a cat or not a full-time day trader. If they know what day trader means. You see, firstly, you need to know two types of putting money into a stock or something. One is called value investing and one is called trading. Value investing is simple. You put $1,000 into Apple stocks in year 2000, and today that $1,000 can become $213,000. So you really need to look deep into the company and whether you'll grow or That isn't usually what trading gurus teach, cause this one takes time for you to see the returns, although it's much safer. The other is called trading, which you don't care about the company, but how its stock price will go up and down within a day or within weeks. You see, here's the thing. For value investing, the stock price goes up or down depends on the company, right? But for little minor changes in a day or in weeks, that isn't a reflection of the company. Although some major news will cause major changes, but let's leave that for another day. Now, what causes the minor changes? Here's a shocker. Sobilang, Dan Ziwei, and maybe even you. You see, there will be many people who come in to buy Apple stocks after seeing that its stocks are increasing and hearing from their friends that they should buy now. These people are very predictable. They won't sell even when the stock price goes down because they know it will go back up. Then at a certain point, they'll give up and sell, making a loss. Then they cry and go eat bread. Here's the thing. A trend trader earns based on Sobilang and Dan Ziwei's errors. It doesn't matter whether it's stock or forex or whatsoever. Heck, even the stock market in Neopets. Because the goal is to earn from Sobilang and Dan Ziwei's errors. So it wasn't any trades as it's all about the human emotions, not the stock or whatnot. You see, a trend trader use what is known as indicators to agar project what Sobilang and Dan Ziwei will do. Because they have a pattern one. For example, let's use the most popular one, the morning star pattern. So this is a pattern based on the candlestick chart. I know you don't know what it is, but it doesn't matter. Just know that based on this, there is a chance that Sobilang, Dan Ziwei, and many others might be turning the stock price from going down to going up. So a trend trader predicts that you will go up and buy at that time. Now here's the thing, that is known as an indicator, and there are many indicators. A trader needs to know them and then apply them to predict the movement, but it's never ever 100% accurate. So here's one thing that's actually kind of more important, risk management. It's when traders set a specific plan to buy and sell and whatnot, not based on emotions, but based solely on the plan. Because if you notice, while the issue is Sobilang and Dan Ziwei is a lot of skills in looking at indicators, which is called technical analysis, the real main issue is their emotions. If they know how to cut losses, they won't lose so much, or in the same idea, win so much. Now, here's the thing, you can learn technical analysis from books or courses. In fact, they are much better since some of them work for banks or funds, places where they are expected to generate returns. But the key thing to learn is always about risk management, or more specifically, managing your emotions. I ask you, if you sign up for a course by a fake guru driving a Lamborghini, you already lost it already, because it means you cannot manage your emotions. Because I can assure you that if you ask any active traders, they'll tell you the most important thing is to manage emotions. Now, this is why I rather there are more Sobilangs and Dan Ziwei's, because technically speaking, traders gain profits from these people's loss. Now, remember, I'm just a blue cat on the internet. Do your own research and never believe anything that a blue cat says on the internet. In the meantime, if you think I learned something, consider subscribing and also watch this video to be slightly smarter.